20% is the magic number when it comes to how much deposit or equity needs to go into the purchase of an existing owner-occupied property. You can still buy a property with less than 20% deposit, but things just get a little bit trickier. When your deposit is less than 20% of the purchase price, you fall into what's called the high LVR, or commonly known as low equity threshold. This is a higher risk type of lend for banks, and as a result, they are restricted in how much they can lend in the space. This means that a number of factors change when it comes to seeking a home loan approval. It's important to note that new builds are exempt from some of these restrictions. This is because the Reserve Bank allows the banks to be more bullish in the new build space as they try to negate the shortage of housing in New Zealand. So the following fundamentals will change under high LVR. Your pricing is affected. You are subject to a low equity premium, which is either an upfront fee or it's added to your interest rate. The exact amount can change depending on which bank we're working with, and it will be approximately 0.3% if you're between 15 and 20% of the purchase price, or 0.7% if your deposit is 10 to 15% of the purchase price. The affordability threshold that you were tested at is also higher, meaning you can actually borrow less than what you could if you had 20% deposit. We can't seek a general pre-approval to buy an existing property. It needs to be property specific, such that it's a live deal, and a live deal is generally a signed sale and purchase agreement, conditional on finance, but some banks may allow you to get to auction, but it's tricky because you generally need to have a valuation done. Banks are not always accepting new customers for high LVR applications. Because they are restricted in how much they can lend in that space, there are times when this lending is reserved for existing customers only, or even times when they're not lending in this space at all. This can change at any time. And lastly, a valuation is always needed. This adds extra time and cost that needs to be factored into the application process. Also, if the valuation figure that comes back is lower than the purchase price, the bank will use the valuation figure to calculate the loan to value ratio, which can impact how much you can borrow and your pricing. So there's a lot to consider when it comes to high LVR lending, so make sure you're working with an advisor who can help you work through everything together and give you the best chance of getting on the property ladder.